and welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. We're at PDAC in Toronto and we're sitting down with John Wisbey, Chairman and CEO of International Lithium. Welcome, John.
Thank you. Well, thank you very much for having me.
Yes, nice for you to join us. Could you give us an overview of your company and bring us up to date on some of your priority projects?
Sure. So International Lithium Corp is a company which it's quoted on the Toronto Venture Exchange, or the TSXV exchange, and we also have listings in Frankfurt and in the US on OTCQB. So as the name suggests, we're primarily a lithium company, but not entirely lithium. I'll talk a bit more about that at the project level. And we've got projects in Canada, Ireland as a joint venture, and we're looking at other places, and we've announced publicly that we're looking at Zimbabwe, for example.
Right. So let's talk about Canada. I understand you have a maiden resource estimate for Raleigh Lake. Could you talk a bit more about that?
Yeah, sure. We announced that estimate last week, so just in press release form, and the way it works in Canada, you've then got to file a full technical report within 45 days, which we obviously will do. So we're quite pleased with that because we have 48,000 hectares there, and we've only done this drilling on about 600 hectares, but we've already been able to declare a resource which is quite credible, and equally to have two resources, one for lithium and one for rubidium. And rubidium is quite an important metal, but worth about 20 times more than lithium, and we've got quite a lot of it. So we're very pleased with that as a big plus for the project. We were aware that we had that rubidium, but it's very nice to be able to quantify it and say we've got at least that. And of course, it's only going to go up as we do more drilling over the years.
So obviously, I guess lithium, obviously, but with rubidium, like how does that change, your company's planning moving forward?
I guess that lithium is very well understood now. So if you've been talking about lithium 12 years ago, people would have thought about medical uses, and people didn't really know about electric vehicles. Now everybody knows. So it's the kind of missionary phase is over, and its execution. Rubidium, I think, is in the same position. A lot of people just don't know what it is, but it's an alkali metal. It's if you look at the periodic table, you've got lithium, sodium, potassium, rubidium, cesium, and what cesium does, rubidium does too. Very many of the same uses. High precision atomic clocks, can be used in quantum computing. Cesium formate can be used in oil wells, so could rubidium formate. So it's a very important metal, and the world market seems to be a lot less than for lithium at the moment. That's undoubtedly true, but I'm also told it's a very opaque market. So that means that people are not putting everything through an open market, and there are lots of private deals. So we're finding out more about that, but I do believe it's a very interesting metal to have, and I do know that it's worth more than 20 times as much as lithium, and that's been the case for the last 3 years. So it's not just a temporary blip. It's clearly valuable for a reason. Otherwise, it would be untraded, but not very valuable. There are plenty of metals that are.
Right. So talking about lithium, let's have a discussion on sort of the high-level market landscape for lithium right now. I guess it's in terms of the supply and demand dynamic. There's been talk about increased demand, but supply hasn't really caught up with that.
Yes, you see so many conflicting reports, and every 3 years you get an investment bank that comes out and says, no, it's all going to reverse, and there's going to be too much supply, and so lithium stocks go down. Then there's some marvelous capital market event, which means people buy lithium stocks cheaply, and then actually, surprise, there is demand after all. So that sounds a bit cynical, but it has actually happened. And I think the trend is for electric cars, electric battery storage, electric everything, and that demand is just going to rise and rise and rise. So now, of course, supply could rise and rise and rise too. It takes quite a lot of time to develop a lithium brine resource or hard rock as we've got in Canada, and there will be. It's like any commodity. It's rare until people produce too much of it. But there's no sign of it plateauing. I mean, there's just going to be very heavily increasing demand, and the question is how fast people can produce that supply. And projects usually take longer than people say, rather than taking shorter. So I suspect that shortage will last for some time.
Right. Let's talk about Zimbabwe, or what you can talk about at that. Like, so why are you looking at that, and why Zimbabwe?
Well, first of all, it's a country that has a lot of lithium. If you look at league tables, I mean, nobody knows exactly. So there are places like Afghanistan where everyone knows there's lots of lithium, but it's not really on the league tables because people aren't at this point, putting it top of their priority to drill. But Zimbabwe is number 6 or 7 or 8 or something like that, based on lithium reserves that are known. Of course, one doesn't know what one doesn't know, and it's a country that I find very interesting. I've been there now really quite a number of times. The whole of that Southern Africa area is very interesting for minerals. I mean, whether it's South Africa itself or Zimbabwe or Namibia, I mean, these countries have a lot, and of course then other African countries do too. So we find Zimbabwe, a lot of people wouldn't have prioritized it at the time of the previous regime, because if you're, however much you like the country, if your assets going to be nationalized, you don't necessarily invest there. That business climate has changed a lot under the new government, which has been there for 4 years now, 4.5 years, and we think it's a good country. I mean, there's a educated workforce. It's actually a lower crime rate than South Africa these days, and it's the people are pretty capable and can work quite efficiently. So as a country, I like it very much. It seems to have a political climate that is actually quite benign to business now. A lot of people haven't realized that, therefore they've excluded it from their lists, but actually things do change, and they can change for the worse, they can change for the better. But this country has changed, Zimbabwe has changed for the better, and it's got lots of lovely people, and we're looking at a number of projects there, and I wish I could go into detail now, but I can't. But we hope to make some announcements in the next few weeks, and maybe months, but hopefully weeks.
Nice. So when you're looking at Zimbabwe, what would you tell an investor who, as you mentioned, there's maybe some uncertainty just because of perception and stuff like that? Yeah. So
I think we can only make the case for the country as I've just done. People have to do their own research. Again, I think the West is risking missing out. China has gone in there in a big way. Chinese companies are becoming very aggressive in Zimbabwe and trying to hoover up resources, and they're usually quite smart people. So you don't get a large Chinese company just simply opening its pocketbook for charity. I mean, it wants to make money, and there isn't. There just aren't as many Western companies that are in there now. But we've got a bit of early mover advantage. We've been looking at this for about 2 years, and we've made various things that may or may not happen in the next few months, which have taken time to create. So I would say, for investors that really doubt it, we'll probably organise a tour there to come and look at what we've got and see for yourself. But I would say it's a reasonably benign business climate at the moment, and the mineral numbers will speak for themselves.
Right. Now I want to talk about an interesting, news recently when the Canadian government announced, for Canadian mining companies to disclose any Chinese investments. How does this affect in your company's perspective? How does it affect you, and what are your thoughts in this?
It's an interesting question, in that there was a very well publicized divestment order of 3 companies that took place recently. Power Metals, Lithium Chile, and Ultra Lithium. And I think that's a mistake, in that it's one thing saying we can control, we're going to give permission for this or not give permission for that. But if you just scare people away, then all that's going to happen is that Chinese companies won't invest as much in North American lithium companies, and that probably is not a good thing, because you're taking away a key component of what kept valuations up. So it's a pity if an Australian company has a higher value than a Canadian company for the same product, and that's what could happen. And the market's always going to go like that. But if you get a systemic issue like not being allowed to invest, then you may find that there's a systemic reason for one being overvalued compared to the other, or so-called overvalued. I think there would have been other ways of doing it, perhaps by restricting exports. I mean, at the end of the day, Canada cares more about critical minerals and having access to them rather than keeping somebody out from owning it. And frankly, people will find a way of doing it anyway. I mean, it's like having sanctions on oil. People find a way of getting it through anyway. It's clearly a trend one can't ignore at the moment, and it's something which we'll see what the outcome is. And we have a small Chinese shareholding in our company, probably about 6%, but it's nothing like enough to be controlling, and it's gone down rather than up. But Chinese investors can be very stable, long-term investors, and if someone's sensitive about exporting lithium or exporting other critical metals, you can achieve that in other ways than restricting ownership. So I would have thought maybe that would be reviewed.
Yeah, that's an interesting. It'll be interesting to see how this plays out in the market.
Yeah.
So what does 2023 look like for the company?
Well, we've got this maiden resource estimate at Raleigh Lake. We're going to be doing a lot more at Raleigh Lake. We're planning to turn that maiden resource estimate into a PEA, a preliminary economic assessment. Because that's important, because it's one thing saying we've got this much lithium and rubidium, but actually one wants to be able to say, well, and if we do the work we need to do, this is roughly the economics and this is roughly what it will be worth. And that might, we hope that will help our valuation. Of course, it depends what the outcome is. I don't know what the outcome will be. Well, if I did, I certainly couldn't say here. That's an important step towards maturity of a project. Again, I'd stress it's only on about 600 hectares of our 48,000 hectares of claims. So, and clearly we'll be looking at other parts of those claims and developing, more lithogeochem analysis, more biogeochem analysis, and some interesting techniques there. For example, you can find out what's underneath or get some idea of what's underneath by scraping tree bark, and we've been doing a bit of that. And so if there's gold, you get gold in the tree. If there's lithium, you get lithium in the tree. And it's kind of obvious when you think about it, but a lot of people don't know too much about that. Yeah. And so that's a guide, because it stops them wasting huge amounts of money drilling where there's really not going to be anything. And you target the drilling in the right place, and that's an important thing.
Smart.
We've done aeromagnetic surveys, and we're going to be using the outcome from those to actually again help us know where to explore first. 48,000 hectares is quite a big area.
So is International Lithium basically an exploration company? So how far do you take a project?
It's a good question. I mean, historically we've been an exploration company.
Yeah.
But I became chairman and CEO in 2018, and we've tended to we had, I think, previously sold projects too early, or we'd sold controlling interests in projects too early, and we're now very much trying to take them further. And again, it's going to be a matter of the economics. It's going to be a matter of how much money we have to raise to do various things. A company that's good at exploration may not have the operational skills to build a highly efficient factory, so therefore you either have to acquire those skills or you let somebody else do it. And those are going to be debates we have in the next year, 2 years, 3 years, 4 years. But we've taken it further down the chain. What we want to do now is really when we have a property, we want to prove how much there is there, really prove it, so that and then there's always a possibility somebody will acquire a good property, and that's a nice choice to have. So, but we can always take it to the next step as well.
Yeah. Well, thanks for sharing the updates from the company, and we'll look forward to having you here again in the near future.
Oh, thank you very much.
Thank you.
Nice to be here.
Thanks, nice to meet you too. Yes.
Thank you.
And thank you for watching. Join us again next time for another engaging conversation on CEO Insights.